Is the high cost of health insurance stressing you out? Is it impacting your budget? Well, you're going to want to watch today's video. Hi, I'm Sean with Families Creating Financial Freedom. And for many Americans, the cost of health care, the cost of health insurance, is a big part of their budget. Doesn't necessarily need to be. I know none of us like it. But there's some things you can do that really make a difference. I want you to watch all the video, and at the very end, I'm going to give you an important piece of news and a link to another video that you'll find very valuable. So let's talk about the different ways Americans get their health care. First of all, many get it through their employer. Over the last decade, probably, I would say health insurance through an employer has shifted from a traditional plan where you might have a high monthly premium. They paid an even larger share. And in turn, when you went to the doctor a couple of times a year, for most people, you might have a $20 or $30 copay. That copay would be larger if you went to the emergency room or had something significant done. But over the past decade, we see more and more employers providing what they call an HSA eligible high deductible plan. What that means is you might have a $3,500 up to $7,000 deductible for yourself that you have to pay before the plan kicks in and pays anything. Well, that seems very steep, and if you have health issues, it certainly is. You reach that deductible in no time, feeling like health insurance is doing nothing for you. But for most Americans, if you're healthy, you may go to the doctor once a year, and that's for an annual checkup. Well, all plans are required to cover preventative services. So if you go to the doctor for your annual physical, or ladies, if you go to your gynecologist or have a mammogram, those things are covered 100% by your health care. So even if you're on a high deductible plan, the fact that you have to pay so much before you get the deductible is not impacting you because those are covered by the plan. You still aren't paying anything out of pocket. On the other hand, if you have a cold or anything else and you go to the doctor or you take prescriptions, that's when you feel like a high deductible plan punishes you because you have to pay 100%. And when I say 100%, I mean 100% of the negotiated rate with your health insurance. So your doctor's appointment might have been $150, the negotiated rate's $100, you're responsible for it, and that goes in the ledger for the year towards you reaching your deductible. But hear me out. If you don't go to the doctor but once or twice a year, the difference in premium really adds up in your favor. Number two type of health insurance, self-insured. So maybe you're employed, you're unemployed, whatever the scenario, but you don't have someone sharing the cost with you. You have to go out and get it. If you go through the government's marketplace and you make below a certain threshold, they give you credits that will offset some of the premiums, or maybe you make too much and they don't provide any offsetting credits and you have to bear the full load. It can be extremely expensive on the open market. You might spend $1,500, $2,000 for a plan. And some of those plans you feel like, again, don't do anything at that. Well, in those scenarios, you may get a credit that reduces the premiums. If you don't get a credit and you're having to pay for it and your income is received 1099, I recommend that you form an LLC and you take your income through the LLC and then you pay your premiums for the health insurance through the LLC. That's 100% business deduction from the taxes for paying your premiums through your business. If you're still W-2 but your employer doesn't pay or contribute to your health premiums, well, I'm sorry, I hate to think that you've got to bear that full expense, but that is the way it is. Here's what I do suggest that you do. If you are healthy, if you don't go to the doctor very often, you should enroll in a high deductible HSA eligible plan. Why do I recommend that? That price is going to be the lowest option available, and then sign up for an HSA. The HSA, your contributions into it are a tax write-off. So you put the money in and it counts pre-tax. That right there could be 30% savings. They give you a debit card and you use that debit card to pay for any out-of-pocket expenses. A trip to the doctor, a trip for prescriptions, those kind of things, but they're paid pre-tax. For most Americans, if you were trying to write off your health insurance premiums and your medical costs directly on your insurance taxes, you never exceed the threshold to fully take advantage of it. So to me, an HSA is what I term a no-brainer for saving on your healthcare costs. That can be up to 30%, like I mentioned. In addition to if you have an LLC and are able to write off 100% of your healthcare premiums. The other piece about that HSA is the fact that that can roll over year to year. The goal being that you build that up where you have more than what a year or 2 years of a deductible could be. So as you get older, if you have a catastrophic event in your life, a broken leg, a stroke, a heart attack, where you breeze right through that deductible to get the health insurance helping out, you've got money set aside to cover the deductible and help protect you. The other benefit of the HSA is that can just continue to roll over and build up for you to help in retirement, in your later years cover healthcare costs. To me, it is a huge asset and something everybody should be taking care of every year. But if you're not in a high deductible eligible plan, you can't contribute. So that's my tip. The other piece to tell you is I'm going to link at the end of this video my previous video that really dives deeper into the value of an HSA and how it works. I suggest if you value this video, you click on that one and watch it as well. It'll really clear up an HSA for you. I hope this has been valuable for you. Until the next video, take care.